Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So in this chapter number 2, accounting concepts, conventions, principles, already 2 videos I have prepared. I have explained completely what do you mean by accounting concepts, accounting conventions, principles, and what are the different accounting concepts and what are the qualitative characteristics of financial statement. All these things I have already explained. Now in this video I am going to solve few problems based on accounting concepts and conventions. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel. Select the subject CA Foundation Accounting. Then select the videos of this chapter number 2. Be perfect about the concept, meaning of accounting concept. Then you can easily understand the problems. Now before starting the problems, take the screenshot of the points, then I'll explain every point in detail. Now, first of all, true or false? In every examination, CA Foundation, you will find the question of true and false. You have to give the explanation about true or false. The first question is, the concept helps in keeping business affairs free from the influence of the personal affairs of the owner, is known as matching concept. Try to understand. The concept that helps the business affairs to be kept separate from the personal affairs of the owner, that concept is called entity concept. Business entity concept says the business affairs and personal affairs should be kept separately, but here it is saying that it is a matching concept. Wrong. According to matching concept, the current year revenue should be matched with current year expenditure. That is matching. So here the answer is false. Now, second one, entity concept. Entity concept means that the enterprise is liable to the owner for the capital investment made by the owner. So, entity concept says that the enterprise is liable to the owner for the capital investment made by the owner. Yes, of course, the business is using the capital contributed by the owner. And whatever profit is there, that profit should be given to the owner. Given to the owner. So entity concept is correct. True. Next, accrual means recognition as money or money is received or paid and not of revenue and cost as they earned or incurred. No, false. Accrual concept is based on mercantile system of accounting. According to mercantile system of accounting, all income and expenditure of the current year should be taken, not when the money is received or paid. If we record the transaction on the basis of cash paid and cash received, that is called cash system of accounting. But accrual system of accounting says that all the income and expenditure of the current year should be taken, whether received or not, immaterial. All the expenditure and income of the current year should be taken. That means incurred should be taken. That means this sentence is false. Next one. The conservatism concept states that no change should be counted unless it has materialized. No, sorry. Conservatism concept says that the accountant should be conservative. That means record all possible losses but don't record any expected gain. Whereas this, what it says is should be counted unless it has been materialized. This is according to realization concept. This sentence is for realization concept, not for conservatism concept. So it is false. Next one. The concept of consistency implies non-flexibility is as not to allow the introduction of improved method of accounting. No. Consistency concept says the same accounting principle should be followed from one year to another year. The method should not be changed. The accounting method should not be changed. So this sentence is false. Next one. The materiality depends only upon the amount of the item and not upon the size of the business, nature and level of information, level of person making the decision, etc. That means it says that materiality is dependent only on the amount. No. Any item, any economic item which has a significant effect on the financial statement is material item. It does not depend only on amount. It also depends upon the nature of the business. It depends upon so many factors, not only on the amount. So this statement is false. Next one. Accrual basis. Accrual basis of accounting is the method of recording transaction by which revenue and costs and assets and liability are reflected in the accounts in the period in which actual receipts or actual payments are made. No. In accrual system of accounting, all the expenditure incurred, whether paid or not, and all the income, whether received or not, will be recorded. That means all outstanding and prepaid should be adjusted in accrual accounting. Whereas in cash basis, cash system of accounting, only cash received and cash paid will be considered. Outstanding and prepaid will not be considered in cash system. Whereas here it is saying that accrual system, only cash receipt and cash payments are made. So it is false. Now, multiple choice questions, MCQs. For every question, 3 answers are given. Only one of them is correct. Select the correct one. All the following items are classified as fundamental accounting assumptions. Except what? So 3 answers are given, out of which one item is incorrect. Which is incorrect? That we have to follow. That means all the following items are classified as fundamental accounting assumptions. In the previous video, I told you the fundamental accounting assumptions are 3. GCA, going concern, consistency and accrual. Going concern, consistency and accrual. These 3 are the fundamental accounting assumptions. So here going consistency, yes, it is a fundamental accounting assumption. Going concern, it is a fundamental accounting assumption. Business entity is not a fundamental accounting assumption. So the answer is B. Right? Next one. 2 primary qualitative characteristics of financial statements are. Actually, in the last video, I have explained you the qualitative characteristics of financial statements. So many characteristics are there. But first four qualitative characteristics are primary. The first 4 are understandability. Second, relevance. Third, reliability. Fourth, comparability. These 4 are called the primary qualitative characteristics. Here it is saying 2 primary qualitative characteristics of financial statements are understandability and materiality. No, sorry. Understandability is primary, whereas materiality is not a primary qualitative characteristic. The first answer is not the correct. Second, relevance and reliability. Yes, of course. Relevance and reliability are the 2 primary qualitative characteristics. Right? So correct answer is B. Neutrality, understandability, no. Neutrality is not at all a primary qualitative characteristic. Now, Kanika Enterprises follows the written down value method of depreciating machinery year after year due to every year written down value method of depreciation. Same method of depreciation is followed year after year. So which accounting concept they are following? Consistency concept. According to consistency concept, the same method of accounting should be followed from one year to another year. So answer is consistency. Right? Next, A purchased a car for rupees 5 lakh, making a down payment of 1 lakh. That means business is getting a car of rupees 5 lakh. Car is a non-current asset, fixed asset. And the payment made is 1 lakh. So cash is going out 1 lakh. So we can say 4 lakh rupees car, 5 lakh rupees car is coming and 1 lakh rupees cash is going. So net increase in assets 4 lakh. Asset side 4 lakh rupees. Now signing making a down payment of 1 lakh and signing 4 lakh rupees bills payable due in 60 days as a result of this transaction. That means the 4 lakh rupees, out of 5 lakh rupees worth of car, 1 lakh rupees are paid. Remaining 4 lakh rupees, a bill is accepted. It's a liability which is payable in 60 days, right? So here liability is increasing by 4 lakh. Because there's a liability we have to pay in 60 days. Apart from that, asset is also increasing by 4 lakh. How 4 lakh? 5 lakh rupees car, 1 lakh rupees cash paid. The ultimate effect of this transaction is the assets are increasing by 4 lakh and the liability is increasing by 4 lakh. Now we'll check. Total assets increased by 5 lakh? No. The total assets are increased only by 4 lakh because 5 lakh rupees car we received and 1 lakh rupees cash paid. Total liability increased by 4 lakh. Yes, of course, but it is not the only effect on liability. Assets are also affected. So fourth, total assets increased by 4 lakh with corresponding increase in liability by 4 lakh. Yes. Assets increased by 4 lakh, liability will increase by 4 lakh. C is the correct answer. Right? Now, Mohan purchased goods for rupees 15 lakhs and sold 4/5 of the goods. 15 lakh rupees worth of goods are purchased, out of which 4/5 of the goods are sold. So what is the cost of 4/5? 15 lakh into 4 by 5. So 5 3s are 15, 3 4s are 12. That means the cost of goods sold is 12 lakh. 4/5 of 15 lakh. So 12 lakh. And amounting for is 18 lakh. This 12 lakh rupees cost of goods are sold for 18 lakh. So how much is the gross profit? 18 lakh rupees is the sale, 12 lakh rupees is the cost. So 18 minus 12, 6 lakh rupees is the gross profit. And met expenses amounting to 2,50,000. From gross profit, deduct the expenses. 6 lakh minus 2,50,000. You will get 3,50,000 as the income. During the year 2020, he counted net profit as 3,50,000. Yes, the business has done correctly. From sale proceed, deduct the cost, we'll get gross profit. From gross profit, deduct the expenses, we'll get the net profit. Net profit 3,50,000. What is the question? Which of the accounting concept was followed by him? That means the person has applied the matching concept. He has matched the revenue with the cost. Revenue 18 lakh rupees. The cost is 12 lakh rupees is the cost of goods sold and other expense are 2,50,000. So minus 18 lakh minus 12 lakh minus 2,50,000 minus 2,50,000 will get 3,50,000. Matching concept he has applied. Entity periodicity or matching. The answer is matching concept. Next one. A businessman purchased goods for 25 lakh and sold 80% of such goods. So 20% is unsold. 25 lakh rupees worth of good the business has purchased, out of which 80% is sold. So unsold is 20%. So 20% of 25 lakh. 25 lakh into 20%, you will get 5 lakh. So 5 lakh is the cost price of the goods unsold stock. And of such goods during the year ended 31st March 2022. The market value of the remaining goods was 4 lakh. Actually, the cost price of the remaining goods is 5 lakh. How 5 lakh? 20% of 25 lakh. It comes to 5 lakh. 5 lakh rupees is the cost price, whereas market price is 4 lakh rupees. He valued the closing inventory at cost. So while preparing financial statements, the closing inventory he has taken at cost. Cost means how much? 5 lakh. He violated which accounting concept? He violated which accounting concept? So according to conservatism, account all expected losses, but don't account any expected gain. Here there is a loss. The cost price of the goods is 5 lakh, whereas the market price is 4 lakh. So he should account the inventory at 4 lakh. He should not account for cost price 5 lakh. So he has violated conservatism, the principle, the concept of conservatism. Next, seventh one. Capital brought in by the proprietor is, when the owner brought capital, what is the effect? Increase in asset and increase in liability, increase in liability and decrease in asset, or increase in asset and decrease in liability. When the capital is brought by the owner, on the asset side, cash will increase. So there is increase in asset. At the same time, liability side, capital will increase. So we can say, when the owner brings capital, it will have double effect. The asset will increase and liability will also increase. So correct answer is increase in asset and increase in liability. A. Next one. During the lifetime of an entity, the accounting provides financial statement in accordance with which basic accounting concept? So during the whole life of the entity, the accounting is prepared following which accounting concept? Conservatism, matching, or accounting period? Periodicity concept is applied. The accounts are prepared for a period of 1 year. So during the whole lifetime of the entity, every year accounts are closed and financial statements are prepared following accounting period concept or periodicity concept. So accounting period is the right answer. A concept that a business enterprise will not be liquidated in the near future is known as, which accounting concept says that the business is going to continue for a long period of time? There is no intention, no requirement to wound up the business, to liquidate the business. This is according to going concern concept. So here the answer is going concern concept. So what does this going concern concept means? The business is assumed to continue for a long period of time. There is no intention, no necessity to liquidate the business. That's all. So few more questions are there that will be continued inshallah in the next video.